there's 500 million crypto brokerage accounts. It's going to dwarf the existing system. Younger people have zero chance of getting up the ladder. The median 401k in the United States of a baby boomer is $150,000. Is it right for one entity to control all the Bitcoin? There should be a limit where you say, well, I don't need to do that.
As the momentum in the crypto market is building and institutions are positioning themselves, Raoul says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. Bitcoin's price sits just over 96,100, still up over 84% year to date. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. With 2025 right around the corner, he says we're about to see massive capital pouring into the crypto space. With major pension funds and institutional investors on board for the coming cycle, Raoul predicts that crypto is on track to be a $10 trillion digital asset class. Powell says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before.
The issue is people have this anchoring bias on price. So they think 100 is more expensive than 1. But in this weird world of crypto, everything's fractionizable. So you just should be thinking about what are the percentage potential returns going forwards. So let's say Bitcoin usually does about a 3x from the previous high, maybe more, depending where you are in the cycle. So you should be thinking about that return as opposed to the price, because anybody can put 10% of their investments in or 10% of their wages in, whatever. It's a fractionizable asset. So don't look at the number. Look at what you can buy of it and the percentage potential returns. So many people anchor on things that are super cheap because they think, well, one day it could be the value of Bitcoin and therefore I'm going to make 1,000,000x returns. The world doesn't work that way. It works, Bitcoin is really the anchoring for the whole space. And over time, right, this space is a $3 trillion asset class today. If I extrapolate the trend rate of growth of adoption or price or market cap, you get to somewhere like 100 trillion by 2034, 10 years. We're only 3% of that journey.
Mm-hmm.
So is it expensive or not expensive? It's probably very cheap. And at every point, and I've been around this cycle, I've been in crypto since 2013, everybody thinks I'm paying the high. And when you look back, when I paid the highs at 200 back in, well, it actually went up to 1,000 and went back down again. Back in 2013, I'm like, I paid the highs. And then I look back now and it's 100,000. That's the thing about exponentiality. People don't understand. They see the cyclicality, but they don't understand the secular exponential trend. So we need to look at what media now. So, we see CNBC in the US is actually quite pro-crypto. So they crossed the Rubicon. So that's the kind of boomer investor generation, and they kind of get a lot of exposure to it. The real pushback is from two sources, the Financial Times and The Economist. And because they are the gatekeepers to the centralized world of finance, they are the power brokers of knowledge. It doesn't exist unless it's in the FT or The Economist has an opinion on it. But here is a world that is inverted to what they know. This is a world that came from the bottoms up, from retail, from individual investors, and not from the power brokers and gatekeepers of Wall Street. And so for them, it's a very threat to their understanding and existence. So, what people are getting exposed to is on one side, this traditional, multiple hundreds of years old media, just endlessly snarking and cynical and terrible about it. But they kind of want the attention as well, because they know there's more attention in this space than everything else. But they're seeing the world of podcasts, distributed media, new media, all becoming much more focused around this. This is the battle that even Elon is playing on Twitter. It's, that there's a change of guard of gatekeepers. It's gone towards the individual and away from the centralized. And so that is a battle that had to happen anyway. It's the battle we've been having in crypto with all of finance. And we're seeing one by one, incredibly, all of finance caving in and saying, yes, this is a better system. It's an extraordinary thing that I never thought I did think I'd see, but just seeing it play out from 2013 onwards, it's been amazing the power that this thing has done. It's like a massive, supermassive black hole. One by one, everybody comes across into this new world because the returns are better, the opportunities are better, and the system is just more robust. It's just a better way of building finance and the internet. So the first one is there is an industrial savings complex whose job is to say, listen, what you need is diversification and you need us to help you manage it. It's far too complicated for you. And in return, we'll give you 8 or 9% returns. But they're not understanding that their audience has changed. Their audience is not baby boomers who did pretty well in their careers and had some savings, even though the baby boomers are actually very skewed. There's a whole bunch with no savings at all. Because the system let them down too, which was their savings never equated to an ability to retire. The median 401k in the United States of a baby boomer is $150,000. They're so...
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now. We are heading into the banana zone, a period characterized by parabolic moves upwards in crypto prices.
I actually had an internal conversation about Michael Saylor.
Yeah.
What is your vision on that strategy? Like, is there at some point, is it enough, or can you just keep on adding to your balance sheet and having that Bitcoin mentality?
From a philosophical level, is it right for one entity to control all the Bitcoin? Okay, that's something,
It's a
if
good
you're
one.
true to what Bitcoin is about, there should be a limit where you say, well, I don't need to do that. But let's assume that he doesn't blow up because of the leverage, because the cost of borrowing is zero for him, and he's got enough assets to cover stuff. Yes, some assets might have to get sold, whatever. I worry more about the leverage it creates in the system, because MicroStrategy is trading at a huge premium. That premium is somebody else's arbitrage. And so whether they're buying Bitcoin selling MicroStrategies or buying the options from the convertible note and that are very cheap and selling more, somewhere within that system is an enormous amount of leverage happening. I don't worry so much about MicroStrategies. I worry about the unwind of the other side of the trade. Because people focus on the MicroStrategies because it's flashy, but this is what happened with Grayscale. Grayscale was trading a huge premium. People didn't realize it was creating gigantic leverage, and everything was one trade, and there was one big customer, 3 Arrows Capital.
Yeah.
And when they were forced out of the trade, it took everybody down, including Genesis, who were the arm of Grayscale, right? So they didn't see it coming either. Nobody knew there was one customer, and that's very typical of a leverage blowout. So we're creating fragilities in a system. The other issue that I've got is there's the 2 times levered MicroStrategies ETFs. Everybody's trading those. That's causing probably a large part of the premium, plus a bunch of Europeans who can't buy Bitcoin in their pension plans, so they buy. So there's a bunch of premium being driven by this stuff. But what happens when the market turns and the 2 times levered guys sell?
Yeah, boomerang's
Comes
back.
twice as fast in an illiquid market to the downside. Before you know it, MicroStrategies is trading at a discount to NAV. That blows up all of the people who've been in the arbitrage trades. You know, there's all sorts that can happen that people don't think about. And I've been in financial markets 34 years, and I've seen this repeat and repeat and repeat and repeat.
Powell also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below.